We are going to get to Senator Mike Lee shortly, but first, I want to tell you a little story, or rather a continuous story that we've been following for some time now, and it's what's happening in Cyprus. What's going on in Cyprus? Now, before you start to say, do I care what's happening in Cyprus? It's a small island nation, the third largest island in the Mediterranean. It has 1 million people. Why do I care? Well, there's a couple things. One, it could affect, the EU, which is the largest economy in the world, and that could affect, the United States. So that we all care about, obviously. But what's happening in Cyprus, and how can I make that transition for you? Well, first, there's a new deal in place. For those of you who recall, we talked about this last week. Initially, they were going to tax all savings accounts. There was a $13 billion bailout that was supposed to be given from the European Central Bank. The idea was that if you have a bank account in Cyprus, which is essentially running itself like one giant bank, most of the economy, $31 billion in deposits on this little tiny island, well, you're going to take a haircut. They're going to take a percentage of your earnings. That was very unpopular. We could show you a little video of how unpopular it was. People protesting in the streets, breaking windows. Surprised we haven't seen more Molotov cocktails. And people are obviously very upset about this. This is in Nicosia, where the youth are protesting. They're very upset about this. So they shifted it around a little bit. They said, okay, we're not going to tax people. I shouldn't say tax. We're not going to just seize assets under 100,000 euros. We're only going to seize the assets of people over 100,000 euros. How much, though? How much is it going to be? Well, the exact percentage, according to Michael Saras, the Cypriot finance minister, the exact percentage is not yet decided, but it's going to be significant. I'm afraid what I have seen suggests a number in the neighborhood of 40%. So 40% of whatever you had in the bank in Cyprus, if you are not a Cypriot and it is above 100K.
Uninsured deposits, right?
Uninsured depositors, over 100K, right. Guess what? Adios, it's going. Now you're saying, well, maybe people could pull all their money out of the banks. No, they can't, because the banks are closed. Not only the banks are closed, there's a limit to how much money you can get out of the ATMs. This is called capital restrictions, 100 euros. This is pretty scary stuff, I think, for people. And then the question becomes, well, why do we worry about this? Isn't this a bunch of just rich Russian oligarchs who are trying to avoid taxes? And maybe some arms dealers in there? I don't know. Could be. But there's also the notion that this worked. And, in fact, the U.S. Treasury Department is backing this. The European Central Bank, Angela Merkel in Germany, she's like, this looks very nice.
Of course.
Of course. The Germans like this.
They're back.
Well, couldn't this work in other places? Couldn't this spread? And couldn't this be a bigger problem? Let's look at the Eurozone economies. You've got Germany, France, Italy, Spain, and the Netherlands. Of the top 5 Eurozone economies, 2 of those, Italy and Spain, are in a bad place. They're teetering. Spain is in the midst of a recession caused by its collapse of its real estate. And Italy, of course, has a guy who used to be a comedian who's running around now with a majority of the vote there. So could that then spread to the European economy? You have all of a sudden bank deposits being taxed and being taken, and then what would that do to the EU economy, which is our biggest trading partner? This sounds like a whole hot mess. Let's get our guest, Samuel Gregg. He's an author. He's a director of research at the Acton Institute. And, of course, his book is Becoming Europe, Economic Decline, Culture, and America's Future. Samuel, thank you very much for joining us. I appreciate it.
It's a pleasure to be with you.
So on this first issue, let me ask you this. People are saying, well, this is a problem for the Cypriots. Let's talk first about contagion from Cyprus to EU, the EU economy. I know it's only 0.2%. The Cypriot economy is only 0.2% of the EU overall. But isn't this more a question of the mechanism, the precedent being set that the European Central Bank will say, you know what, depositors, you're going to have to pay for your own bailout if this happens in the future, and the effect that this could have. Could you explain the effect that this could have in Italy and Spain?
Well, there's a number of effects this could have. It's important to remember that the Cyprus situation is, in a sense, a result of contagion from Greece. So the Cypriot economy is very much tied into that of Greece, and what they're feeling in many respects is what has happened in Greece. Now, what's interesting about this particular development is, as you say, the bill is being footed to those who put money into the banks. In other words, people are not expecting European taxpayers to bail out the Cypriot economy. So in one sense, this is a good move. But the other thing to keep in mind is that Cyprus's debt situation, in terms of its percentage of debt to GDP, tracks pretty much that of every single other European economy. So in one sense, you're right. This does set a precedent. This is better, I have to say. What they're doing now is better than what they've done in the case of Portugal, Spain, Greece, and Italy. But I'd be very surprised, and the Dutch finance minister who heads the Eurogroup on this particular subject has made it very clear that he doesn't see this as necessarily being applied to all other European countries. My guess is that the European Union are trying to send a sort of mixed message. And the message is this: if the economy is small enough, we're willing to risk you going under. But don't think that that necessarily applies to every other economy within the European Union. So in one sense, they're trying to be tough, and that's particularly, I think, because German voters are fed up with what's going on in the rest of Europe, and Germans are asking themselves, do we have to keep bailing out the rest of Europe? On the other hand, they know that if they actually push someone out of the Eurozone, that will raise enormous questions about the Euro's long-term stability as a currency throughout the European Union. So there's a lot of different political agendas going on here, and it's very clear to me that we have not seen the end of this process.
I think, guys, it looks like one of a couple of things can happen here. I think the Bank of Cyprus Laiki model, where Laiki was seen as sort of too big to fail, if that ends up closing down and the country survives, I think that will have sort of a ripple effect into American markets about the too big to fail model. On the other hand, there's no saying that Cyprus still doesn't leave the EU, and it might not be this month, it might not be, in 6 months, it might be in a year, and that, again, will have another ripple effect. So the problem might be contained for now, but I still think that this is going to affect banking overseas and the idea of trust, in your banking institutions in general.
Well, this is something we've seen several times over now, which is, the people on the ground in Cyprus are saying, well, this is ridiculous, this is so unfair. But the other side of this is that it could be the complete economic collapse of the country. So while there are people protesting in the streets, this is meant to prevent a complete, as you say, removal from the EU, which would be catastrophic. That means no more debt for your country. That means no more bond issuance. This happened, in fact, in part because they had junk bond status issued to them. But there's not a whole lot of choice here. This is part of the problem. They can't print their way out of this like some other countries can.
But what about Cypriots' ability to marry Greeks? Is that... I've been knee-deep in same-sex marriage all day, so it's hard for me to separate issues. That was no, but I'm serious. No, I do have a substantive. I have a substantive response. It was a joke. The substantive response is this, Buck. That the fundamental issue, the fundamental problem of the EU remains, and that is, we joke that Angela Merkel, of course, supports this particular measure because it's being built on the backs of Germans. And unless you can envision a potential political union in Europe between Germans and Cypriots and Germans and Greeks and Germans and Italians, then the Eurozone, the EU as a monetary union just simply doesn't continue to work. They don't have the same interests, values, cultures, or economies.
And David Cameron, he's been quoted out of this Cypriot, mess of saying, thank goodness that the UK did not get into the euro and that they still use the pound. But I don't want us to sort of overlook or underestimate the impact that this action is going to have on Cyprus. I read in the Daily Telegraph that basically small businesses, if 40% of their bank accounts go out the window, they're done. They go out of business overnight.
Sure. We're telling them that they're broke, right, Tara? I mean, this is where it is.
And I think that some of it is that, well, because of all of the illicit money that is deposited in the Cypriot banks from these Russian mob bosses and oligarchs and everything else, their deposits are 4 times the economy. It's like, where did that come from? So maybe people don't, feel so bad.
They're not the only ones who are going to get the axe.
No, I agree. But to your point about the fact that the U.S. can print money, the quantitative easing part of what the U.S. can do, that, that's a problem too, because, even though we just continue to print money, eventually that diminishes the value of our money, of our currency, and that's where it becomes a problem in the U.S. So, yeah, we can print money to keep things going. We don't necessarily need those bailouts, but that has a long-term effect on people's money, too. So we hope that people don't have a run on the banks like it did in the 30s and collapse our banks because they think, uh-oh, I better put my money under the mattress because banks could go under here.
In Cyprus, if you put it on the mattress, apparently that was a smart financial move.
Yeah,
but I want to close the loop with our guests because we're trying to bring this back to what's going on in the U.S. I don't think anybody, Samuel, I don't think anybody here is particularly afraid of the U.S. government doing a 10% bank levy, but at the same time, through quantitative easing policies, isn't there a transfer of wealth going on? I mean, isn't the Fed actually, through its policies, shifting from savers away to debtors?
Yes, of course, this is the problem of fiat money and central banking, and I talk about this in the book Becoming Europe. You effectively engage in large-scale wealth transfers without any democratic consent. It's a form of taxation without representation, which is one of the big problems with fiat money, and it especially hurts people who are poor, people who don't necessarily have the financial skills, who can quickly adapt to changing circumstances. It affects people on pensions, people on fixed incomes. So in that sense, it is enormously problematic.
So Samuel,
governments
is it
can
fair
do
to
this.
say then that because the U.S. government can print money, because we're the reserve currency, and because we're willing to buy billions of dollars of our own treasuries, what's happening in Cyprus, everybody seems to understand that there's a wealth transfer going on, but in the United States, it's hidden in a sense, isn't it?
Yes, it certainly is. And one of the other things about the Cyprus situation, which is very pertinent for the rest of Europe, and to a certain extent the United States, is that Cyprus exhibits all the features of European economies. Very uncompetitive, large public sector workforces, impossible to fire, employment laws, and that all reflects, as someone earlier said, the values and expectations and beliefs that inform a lot of people's economic behavior, particularly when it comes to southern European Mediterranean countries. In the United States, I think we see different parts of the United States have more or less gone down this path. California, Illinois, the state of New York, all of these have more or less coalesced towards what I call European economic culture in the way that it reacts to what people expect, in the way that the financial system works, and also in terms of what politicians do in response to what voters want.
And thus the threat is that America becomes more like Europe. Samuel?
Well,
becoming
some of
Europe,
us,
right?
we're already there.
We're already there. Samuel, thank you very much. We appreciate you coming on the program.
Thank you very much.